Hey dividend investors, my name is Alan and today I am going to be breaking down how I have a $250,000 portfolio. Now, not all of this is into stocks, and I'm going to break that down. You really want to be diverse. I really also didn't exactly want to do this type of video. I know there's been a lot of people commenting saying, hey, show your portfolio, everyone else's. And all I wanted to say is, no, I don't want to be out there and people knowing how much money I have. This is kind of a video that's really hard for me to make because I really grew up with essentially nothing. I grew up in geared to income housing, which is kind of the ghetto, I guess you could say, even though I lived in a really good city, Burlington, when I grew up, and then we later moved on to Hamilton. That was basically what showed me I don't ever want to be in that situation, and that's why I was able to have great parents as well to be able to allow me to live at home even until the age of 30, having this kind of money. So basically, to start off is my biggest single, actually I would say probably my second biggest single purchase, which is my number one car, what I use in the summer. I don't use it in the winter, which is my 2016 Mustang GT, and that car cost me $35,000. It was a good deal at the time because at the time it was worth $45,000, and now I can still sell it for around $40,000 if I wanted to. My other car is a 2009 Ford Escape. I purchased it originally many years ago for about $12,000 or $13,000. Now it's worth around $5,000. It's my daily driver. It's got a little bit of rust on it, but that's okay. That's what I drive in the winter. It's a four-wheel drive, so it's a lot of fun. But both of my cars are a lot of fun, so together that equals roughly around $45,000-ish right there. Next, I don't have a house. I live with my parents, but I am looking for a house right now, and I'll probably buy one that I like over the next year or so. I'm currently looking for a house out farmland area with at least an acre of land so I can build an indoor basketball court attached onto my house, or even detached. It doesn't necessarily matter. And then from there is my sports card collection and Yu-Gi-Oh card collection, which together I would say conservatively is worth in the $1,500 to $2,000 range. And then I've got my stocks. And when it comes to stocks, I do have quite a bit. I have put a lot of money away into the stock market. I'm going to get down to my strategy and the stocks and ETFs that I hold as well. So first off, at the time of recording this video, this does tend to change. Now, I recorded this screenshot of a video earlier on in the day where it was worth $241. Now, I am recording this video later on in the day, and this actually totals now $243 because it's gone up throughout the day. How I've done it is with the market value being the highest first. So my biggest investment is CIBC. Next is TD, BMO, Bank of Nova Scotia, National Bank. Yes, these are all Canadian banks. These are literally about 70% or so of my total investment. I should be more diverse, but I really do like their dividends that they do pay. And they essentially have a whole market cornered, and they are starting to expand worldwide, whether it be the Caribbean, as we see with a Bank of Nova Scotia, or Americans like we see with TD and BMO. So this is still a diverse, somewhat diverse investment, but not as diverse as you may think. ZWK is a covered call for American banks. So again, essentially my top 6 investments have all to do with the Canadian banks, or at least some kind of bank, I should say. Next is ZDV. ZDV is the BMO Canadian Dividend ETF and currently pays a 4.4% dividend. And then I have Carnival, which is, of course, Carnival the cruise ships. And Carnival is great, mainly because with Carnival, if you have 100 shares, what you would be looking at doing there is getting a lot of a discount every single time you go cruising. I tend to cruise a lot. I tend to go on 1 cruise to 2 cruises every single year with Carnival. So for me, that is a massive discount because I think I get somewhere in the range of, I think roughly around $150 a cruise for spending money. So it doesn't end up to be too bad. Plus, Once it doubles, which it has not of yet, once it doubles, I can sell half of those shares and, of course, still be golden. All you need is 100 shares to be able to get that onboard credit. ZWC is the next one. ZWC is an interesting ETF, mainly because it is a high dividend ETF, but it's the Canadian high dividend covered call. This one pays 7. Yeah, you heard that correctly. ZWC, this one right here, pays a massive 7.62% at the time of recording this video. That is huge. ZWA is the next one, and with this ETF, it's again a very good dividend paying ETF. This one is a BMO, again, covered call Dow Jones Industrial Average hedged. This one's hedged to the Canadian dollar and currently pays 4.74% dividend. So that's another good one to get. And of course, I am up on every single one of these, which is really nice to see. I was grabbing a lot of these back a few months ago. That's why I've got just not a huge increase. Next one is ZWH. Now, ZWH is one of my favorites when it comes to the ETFs from BMO. ZWH is a high dividend covered call, but for the US market. So this one is actually quite interesting. So ZWH, 200 shares of it, but what we're looking at is Bank of America is the number one holding, then it goes down to Cisco, Home Depot, JP Morgan, Microsoft. So it's some of the basically blue chips doing covered calls on them, and of course that's where you're getting the bigger dividend. Tesla, there is a reason why I have that. I wish I had more of it, but I don't. I was doing a lot of call options on Tesla last year when it was going up huge. Now, I don't have any call options on it. I don't think I'll be getting anytime soon, but I still have 3 shares left of Tesla, and that is essentially what I've got left of Tesla. I had a lot more shares, but I traded them in so that I could get a Mustang. I was originally going to sell them when I had to buy the Tesla someday, but I decided against that when I seen a great deal on a Mustang. I bought it for $35,000. It's now worth over $40,000. Now, ZSP is basically an S&P 500 ETF. Now, this is what I store my money in here while I'm waiting to invest. So, as you can see up here, I only have 2 lots of Bank of Nova Scotia, yet I have over 21,000 in it. Now, when you start seeing stuff like this is why. When I first put my money into the trading account, the first thing I'll do is to buy shares of ZSP. When the rest of the market, so when whatever stocks that I like go on sale, which means that the stock prices go down, I will sell ZSP to buy those. So while my money is growing here, I can then eventually wait for this to go down so that I can trade them in to buy these. This is why I've got so much of these and so little of this. That's at least my strategy. As you can see, I only have $1,800 in that one right now. HMMJ, I've got 100 shares. This is a marijuana ETF. It does pay a small dividend, but how it pays its dividend is it actually borrows out their shares of the marijuana companies, and basically what happens with that is you get a dividend from the loan interest essentially of the shares. ZQQ is another interesting ETF. I don't have much of it, but with ZQQ it does pay a very small 0.4% dividend. It's a Nasdaq hedged Nasdaq 100 ETF. It's hedged to the Canadian dollar. And with that, it's not too bad. I just have a little bit of it. It's nothing part of really any part of my my trading account, other than the fact that if I need to sell something to buy something, that'll be probably the first one I'll sell because it's not paying me a dividend like the others. And then there's Sundial, which is essentially a free stock. I never really technically had to pay for Sundial. I basically sold half my shares when it went up to $5, and I bought it, as you can see, an average at 70 cents, and got up to $5, sold half my shares at $3, sold another little bit of my shares at $5, and then I wish I sold it at 9 or 8 or whatever it stretched to for like a couple of seconds, but I didn't. I decided to be safe, and basically that made the rest of these shares free. So once they get up to $10, $15, $20, if they ever do, then that's a bonus for me. I may or may not sell them at that point, but I might sell half of them when they reach back up to $5 or $10, and I'll sell them again, sell half again. And I'll keep on selling half until infinity, because until there's one left, then it'll be there. So that's the investments of a 30-year-old. Now, if you're wondering how somebody could have this kind of money, I did make a video about that a little while ago. Basically, still live at home, but invest your money so that eventually you can go out and buy a house. Housing prices are kind of insane here. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button, subscribe. I'll see you guys again next time.